What's up, everybody? It's Stas here. Welcome back to another video. As you guys read in the title of this video, I just wanted to go over the top stocks that I'm looking to trade and the ones I'm watching for the month of March in 2018. So let's hop right into the topic of the video, guys. Right here, the number one stock I'm watching is XOM, Exxon Mobil Corporation. So for those of you guys that do not know, this is a huge billion-dollar corporation, and usually stocks like this don't really have much volatility, right? They grow slowly over time. If we look at the 3-year chart on this particular stock, right, it's not really growing over the 3-year chart, right? But over a 10-year period, this stock is slowly coming up, right? And we're going to look to play this particular dip right here from $89 to $75, right? Because it's actually recovered from this exact position where it's at now. So if we go back to the 180-day analysis, we can see this a little bit closer. Actually, the 1-year analysis, we can see this a little bit closer. So we saw that over the past year, right, not much growth from Exxon up to this particular point, but we saw a dip here to that $75 level where it's at right now, and it's consolidating there right now, exactly like it did right here, right? It went down to the $75 level, and then it spiked up all the way up to $89 over the course of how many months was that? A couple of months, 4 or 5 months. So we're looking for this particular stock to complete that same exact pattern. Like I said, it's at support levels of about $75 right now, and the resistance level is at about $89. So you got to ask yourself and look at the potential for profit for this particular stock and see if it's worth it for you. So for $77, right, up to $89, that's 15% potential for profit. And this is definitely a safer stock due to it being a huge company, not crazy volatile, and there's just a lot of money in this particular stock. So the price isn't going to move crazily over time. So $77 to $89 is about 15% potential for profit. And when we're looking for swing trades, guys, a huge sell-off is a key thing for us, like I said before, because it opens up potential for profit. So we have to identify support levels and identify resistance levels because this shows us potential for profit. And if we look back at the 180-day analysis, this particular stock has been consolidating here for, let's say, what's the date here? For the whole month of February, pretty much. This stock has been consolidating at this price level between $75 and $77. And it actually just recently broke above the EMA line, and it's starting to hold above it and bounce above the EMA line. And this is a huge sign of an uptrend starting to form. We can see it even better from this particular view, guys. We can see that the EMA line is pointing straight up and the candlesticks are trending above it. So how I plan on trading this particular stock, I'm going to wait till it breaks above 78.50, right? And from 78.50 up to previous resistance levels, the first resistance level we see here is right at about $84, let's say, right at about $84. That is about 6% potential for profit. Let's try it one more time. From 78.50 up to $84, that's about 6 to 7% potential for profit. And I look for this to be about like a 2 to 3, maybe 4 week swing trade. And that's on the safe side at $84. And if we hit $89, like I said before, that's 15% potential for profit. So with $10,000, that's $1,500 return with 15% potential for profit. So in my opinion, this particular stock offers a ton of value because there's more room for growth than room for loss, in my particular opinion, and based off of the research and due diligence that I put into this particular stock. So that's the number one stock I'm looking to trade in March of 2018. So the second stock I'm looking to trade in March of 2018 is actually HAIN, Hanes Celestial Group. And this is one that I've actually mentioned in a bunch of my previous videos because I actually have a huge position in this particular stock. A good amount of my portfolio is actually in this particular stock. So that's why I wanted to cover it for you guys and show you, in my opinion, why I see value in this particular stock. So if we look over the 180-day day analysis right here, 4-hour candlesticks, we see that there's a clear support level, right around $33, and that's right where it's at right now, and that's where it's holding above. So this is the key level that we want to keep our eyes on. So we've seen from this $30 to $33 level of support, right here it dipped a little bit below that support level, but at $31, but we saw that it actually went from 31 all the way up to $45, right, in a matter of, this was 6/23, June 23rd to July 28th. In a matter of 1 month, this particular stock went from 33 to 45, and then it dropped back down to that support level at about $33, $34, and it did that same exact thing up to $43. And right now, it's back down to that support level at $33, and it's been consolidating here for the past couple of weeks. Let's say past 2 weeks, it's been consolidating, right? It hit lows of $32, went back to $35. It tested that same support at $32, and now it's starting to bounce back up and recover from that support level, and that's just validating that support level even further, right? So that support level has been validated once here, twice here, and now it's starting to consolidate and break above that EMA line. So I have a position in this particular stock already at about $32 per share, and I plan on adding more to this particular stock as it validates that uptrend even more and starts to break above the EMA line, and we see some price action increase. So I plan on adding even more once it crosses about $36. That's my particular plan with this particular stock. But like I said, support levels at $34. We see resistance levels at about $43, and from there, right, if we got in at about, let's say, $33 up to support levels of or resistance levels rather of about $43, right, that's about 19% potential for profit, 20% potential for profit. And the potential for loss with HAIN, this particular stock, let's go back to the 1-year chart, right? There's not much potential for loss. Obviously, we don't know what the stock market is going to do. We don't know what's going to happen. For all we know, it can crash next week, and HAIN can go down to $20 in a matter of 1 week. But based off these technicals and based off previous price history, we saw over the past year, $31 has been the lowest price, and we can see the pattern even better on this particular chart. 31 up to 45, down to 33, up to 45 again. Now it's back to 33, and my plan is obviously having a tight stop loss on this particular stock and just letting it ride out, being patient with it, and seeing if it can start that uptrend and confirm it and ride it back up to about $42, $43 and take my profit. So that's my particular plan with HAIN. Like I said, I have a small position in this already, and I'm just going to add more as it continues to validate that uptrend. So this is why HAIN is the second stock I'm looking to trade in March of 2018. The third stock I'm looking to trade, this is actually an ETF, is GUSH, G-U-S-H. This is a Direxion oil gas based ETF, and right off the bat, guys, we can see that this particular ETF is slowly starting to build some momentum, and it's slowly starting to build and validate an uptrend right now, guys. We see that it's been consolidating at this particular price level for about 2 weeks now, right? And it's slowly starting to break above that EMA line and starting to trade above that EMA line, right? It's bouncing on the EMA line and slowly starting to validate it. So that's why there's an uptrend slowly starting to form with GUSH, in my opinion, based off these particular technicals. And that offers a lot of value, in my opinion. And like I said, when stocks see huge drops like this, it opens up potential for profits. So from $37 to about $20 where it fell, right? It lost almost half of its value. That's like a 40% drop, and that opens up 40% potential for profit. So we're seeing that it's holding above that support level at about $19, $20, right? It's been validating that EMA line. It's slowly starting to build momentum. And this is an ETF that trades on this particular index right here. And we see that this is pretty much the same exact chart as GUSH. And right now, this particular index is at a support level at 48 or it's validated the support level at about $4,800, and it's slowly starting to do the same exact thing as Gush, since it's the same exact chart, because Gush trades based upon this, right? So it's slowly starting to build above that EMA line and starting to form some momentum and start to grow that uptrend. So this is why we're looking at Gush very, very closely, and we see that from about $20, right? All right, let's say now it's at $23. Let's say you wait for that full-on confirmation of an uptrend, and let's say you get in at about $24 right here, right? And you can ride it up to previous resistance levels. The first resistance right here, guys, is at about $30. So from $24 up to $30, that's 20% potential for profit. And that's just the first resistance, guys. If we bumped it up all the way to $37, that's 35% potential for profit. And again, this particular ETF offers much more potential for profit than potential for loss. We can see that the support level at $20 is a very, very significant support level here, because if it actually breaks below that, right, it can run as low as $15. And this is exactly where I would cut my losses if, let's say, I bought a position in today. I would cut losses right around $22, $23, depending on what particular price point that I got in on this particular ETF. So like I said, guys, from $24 up to $37, that's about 35% potential for profit, and with a $10,000, that's $3,500. And this is going to be about like a 3 to 4 week swing trade, in my opinion. And with 35% potential for profit, and let's say we got in at about $22 and we stop loss at, let's say, like $21, if we're more risk tolerant like me, that's a 4% potential for loss compared to a 35% potential for gain. In my opinion, that's a good trade to take on, and this is why this is the third stock that I'm looking, or ETF that I'm looking to trade in March of 2018. And these are the top three that I'm looking to trade, guys: Gush, HAIN, and XOM, ExxonMobil. All these stocks have a lot of potential, in my opinion, but if you're new to the stock market, do not trade these simply because I'm trading them or some other people are trading them. You got to do your own due diligence. You got to do your own research. You got to understand the stock market and these different stocks that you're getting into and ETFs you're getting into and how they move on your own, guys, because that's very important if you want to do this trading stuff on your own without having somebody to tell you what to invest in, tell you how to find stocks on your own, because that's not how you're going to make a living off of this one day if that is your goal. So hope you guys enjoyed the video. Make sure to leave a like, drop a comment, subscribe for future content. Follow me on Instagram at Stas_Surfest_entrepreneurship. Link should be down below in the description. Let's make some money today, guys. Peace.